What is up, team? Chuck with Traders War Room, and I'm back at you with another video. Listen, this is a midweek sit rep, and if you guys haven't got the message and seen the alerts, I am training in a beautiful canyon in the middle of the desert out in western Colorado, guys. So my alerts, my posts, things of that nature are a little slower and a little unorthodox, but you know what? We're still out there watching the market when we can. We're still making moves to make some money, and we're still educating the viewers. What I need you to do is I need you to hit that like, share, and subscribe button right now, and I need you to come along with us on this journey, man. We are doing great things out there for a lot of people, and I want you to reap the benefits of those particular actions, man. So please hit the description tab, look to see what we got in this video, come along with us on this journey, and as always, if you're ready, follow me, and let's go to war together, team. Traders War Room wants to remind the viewer that all content on this channel are for education and entertainment purposes only. You are responsible for every move you make in the stock market. Have fun, tread cautiously, but definitely go to war and let's get it. All right, and any of you guys that are on our social media platforms, man, the Discord is popping off, man. We are making good things. We're doing great things out there, and we're posting all of our things. So some of the winners and the losers that we've had since we started this week, we're going to get into it right now. We haven't had many losers, but you know what? We've had quite a few winners. But I do want to highlight, man, losing is part of the game, and you got to understand that if you're getting into this investing thing, you are going to take some L's. Anyone that tells you they got a 100% win rate is a liar, okay? And you need to run away, and you need to delete them and block them on your social media because they are just trying to take your money, okay? Losing is what makes us better. We learn from our mistakes, but we want to make sure that our wins outweigh our losses, and we're going to get into some of those right now so you can see how we're rocking it on the social media platforms and everything and doing what we do at Traders War Room. All right, team, and like I told you, man, I haven't been as active, man, because I've been out here doing my thing for God and country and stuff like that. But a couple of the trades that we got in, man, eBay, we called this out yesterday. We got in at 80 cents at a $72 call, and we got full out of this position today on 21 September. Listen, look at the T1s, T2s, and T3s. If you don't know what that means, that's my trimming, okay? I trimmed out at $1. I trimmed out at 165. I trimmed out at 215. Look, this thing hit a high of $2.30 before taking a little bit of a dip, okay? So if you were too greedy and you were looking for something more than that, man, you probably lost money on this trade. But if you rock with me, you know that we're taking money when it's presented, and we're always securing that portfolio, man. You got to ride the wave up, but at some point, you got to take your money and run. All right, let's look at the next one, FDX. Man, this one was a killer, guys. $260 call that we placed yesterday. It was alerted out at $3. Man, we trimmed at $3.15. We got out again at $3.25, and we were all out at $3.75. Look, another one that hit high of the day at $4, but prime example of why you secure your money when the money is presented, okay? Because in after hours, this thing tanked. Why? Because it had earnings after hours, okay? So we rode the wave up. We made our money. We got out before it started tanking on skepticism and things of that nature. So congrats to everyone that followed the blueprint and you made your money. And finally, the play that we got in at the buzzer today, COP, $59 put, man. Listen, this thing skyrocketed on a $9 billion deal it was talking about, okay? Now, anything that goes up has to come down, and oil is notorious for jumping up, coming down, jumping up, coming down, man. So we're betting that this is going to come down a little bit. We got in at 70 cents. Our price target is 90 cents per contract. But look, I'm going to start looking to scale out once I see this thing at 85 cents, okay? Because I'm going to ride the wave up. Now, if it does better than 85 cents, great. I'll get out again. I'll sell a couple more contracts, things of that nature. But at 85 cents, my brain's starting to click. Like, man, I need to think about securing that portfolio and making sure I lock in profits, man. So I hope this worked out for you. Check out the Discord and the other social media tomorrow for the alerts on what I'm doing. But don't rely on me, man. Internet fails. Things happen. You got to secure and manage your portfolio at all times, all right? All right, so let's talk about a couple stocks that I'm looking to close out this week strong, okay? I got them there rectangled out, and yellow rectangles. So let's talk about it and look at some charts and maybe look at some options that we're thinking about playing or trading, closing out this week, making us some money in the long run. So first one up is BlackBerry. Listen, look at my levels there, okay? Red is our bottom level support level. Blue is what I consider a top level resistance level. And then we got some purple, our intra in between those type of support and resistance things, okay? Now, one time this was a meme stock and it was popping. It trended with AMC and things of that nature. It's kind of lost a little steam on its meme thing, but with their having earnings coming up, and I don't think that their earnings are going to be spectacular, but we should see some volume. And let's take a look at a couple of the option contracts that could possibly play in our favor if we decide to get into this trade. These are the indicators I like to use on BlackBerry, just by the way. All right, we see that MACD is below the signal line. Money flow is kind of pointing down. We don't got much volume. The AO is on the bottom spectrum. TTM squeeze hasn't started to trend up. RSI, we're at the 30, so we're definitely approaching that oversold type of area, and TSI is pointing down. Okay, so indicators don't look good for a whole bullish run, but that could change in an instant, especially with some money flow and some good people wanting to buy, a volume of people wanting to buy this and try to capitalize on the implied volatility of this. So let's look at some options. So if you're looking to get in options on BlackBerry, man, those are the ones that I would consider to be the best deals if you're going in for a call. Okay, so let's take a look at some of the Greeks on them. Now I want you to look at this, okay? The $9.50 call that expires this Friday, okay? Look at that volume, all right? You're looking at almost 3,000 volume and almost 2,200 in open interest, okay? Now the delta, 48, right? We're looking at that as kind of percentage, so 48% chance that this thing's going to make money, but we got to be cautious with that theta, okay? Because we're going to lose 8 cents per contract on this one particular, okay? So if we decide to get into something like this, we need to be mindful that this is definitely going to be a quick play, okay? So it's going to be a day trade, possibly a swing trade, but no more than like 1 to 2 days, man. We are not rocking this into earnings. Another one, just to give you a comparison, the $10 call on BlackBerry, right? All right, we see almost double the volume and almost triple the open interest, okay? And our delta is at 34, so a little bit lower delta, but then again, our theta is a little bit lower as well, okay? So definitely more volume in this particular contract, but it has to rise more in order for us to make more money in this particular trade. So definitely it's very risky, but that's what you do. Scared money don't make money. So pay attention to these levels if you decide to get into a trade like this, especially in a volatile market like we've seen lately. Now, we aren't always talking about calls, man. We're talking about puts, too. So if you don't think BlackBerry is going to do anything spectacular and you're looking at these puts, man, hey, we got something for you, okay? Those are the ones outlined in that yellow square that I like, okay, based off of volume, based off of price action, based off the price of the contract. Now, on the put side, this by far was the contract that had the most volume, okay? So the $9 put. So this is really the only type of put I'd be interested in. Man, listen, when we're looking to get into these contracts and we want to get in and get out and things of that nature, we need to have the volume be up there, okay? We need to be able to have a lot of price action so we can get in, sell, and get out quick. And especially if we need to hit our stop losses, we need to be able to get out of those contracts, okay? And so volume is key on these things. And on this put, you're looking at a 34 delta. You're also looking at a 7 theta, okay? So we need to pay attention to those levels. This particular type of trade would be something that we're looking to do a day trade on, if not possibly a swing trade if we see the price action going in our favor. All right, a popular one this week, Nike, man. Okay, I want you to pay attention to that yellow rectangle right there, all right? That's the last earnings call that Nike had, and this thing shot up, okay? Tons of people made money on it. Now, do styles repeat themselves? Yeah, of course they do. But since then, we've seen it kind of spike up and come back down, all right? So we had that 174.38 as a high, and now we're back here at this 155.02, which is about the level that it jumped up last time it had earnings. And I got those levels of the break in the yellow bars right there. Now, of course, I'm looking at other levels too, and so I got some levels highlighted in the purple lines. I'm thinking relatively, it would not be unexpected for this thing to boom on earnings type of rumors to go past 157. So maybe 162. I'm thinking 167 might be a shot out there in the dark, but who knows? Nike does tend to move quickly, and a lot of people like this particular stock, but I could definitely see 157, 160 in our future based off of earnings rumors. And now when we're looking at Nike, we're looking at the indicators right here, okay? Everything's pointing down, which tells me that we're on kind of a downtrend, which you saw from the chart. But definitely, I'm liking what I'm seeing with the volume. You're starting to see an increase in volume, which means we're starting to get some interest. And once again, I would not be surprised if this thing could bump up a few dollars, a few cents, and get us some percentages going in the top level type of position. So when I think of Nike, I'm thinking calls, okay? It could possibly be puts, but I just don't see Nike going into earnings on rumors going down much from here, okay? So I think we're gonna see a spike, and I like these that are highlighted in yellow rectangle. This is one that I think would do fairly well. $160 call contract, has the volume. The delta isn't bad. The theta isn't bad because, again, this would be something that we're looking to get into as a day trade, possibly a one-day swing trade if the price action and volume were on our side. Now, I would not recommend this contract, but I wanted to highlight it for you just to show you kind of the bullish impression that Nike has on people. Look at this, $190 call, and it has 692 volume already on this contract with almost 3,000 open interest, okay? So definitely not a contract I would want to get into, but just to give you an impression on people's bullish intent with this particular stock and where they think it's going to go by the end of this week. And definitely not as much volume on the put side, but if you're thinking put for Nike, the 155 put has by far the highest volume with the best open interest. And this would be the only type of put thing I would recommend you looking into based on the volume and open interest alone. Also with the implied volatility and the delta and the theta looking decent for day trading. But I don't think I would think put on this particular stock, and that's just my opinion. But here it is for you if you decide to roll that way. All right, and last one, just kind of an oddball one out there. You know how I like to roll with these oddball ones. I want you to look at trip.com, okay? So we're looking at trip.com. This is more for the cheaper side of the spectrum for people that want to still try to make some money on an earnings rumor type of play. But look at those levels I got, okay? We got a bottom level of 24.54, top level 41.72. Now, I don't think this is going to do anything spectacular and reach that 41 level, but definitely last time earnings were there, it popped up a few dollars and a few cents, so I could see this thing pushing towards the $30 range. Let's take a look at some of the contracts they got. But before we get there, we always got to look at the indicators, and we're looking at the indicators. And, I'm seeing it's above the signal line on the MACD. Money flow is starting to kind of come on a trend. We had a little pullback, but has a little uprising. AO looks like it's kind of bottomed out a little bit, but ready to come back up. TTM squeeze looks like it's just barely down on the signal line. RSI is about midway. So we're not looking too bad for a real quick day trade. And I wouldn't swing this one at all, to be honest. Now, you can't get weeklies with this one, so this one only has monthlies, but these are the monthly ones that I would be interested in, highlighted in that yellow square that you see there. And you can see with this relatively unknown and unpopular one, our volume isn't there, but open interest is there. We still got enough volume that we could come in with a little less money, a couple contracts, 1 to 5, and still have a pretty good chance of making some money. Delta's there. Theta is actually on our side, only 3 cents per day if we decided to swing it. But again, these are those playing the earnings rumors that I wouldn't be rolling into earnings, so I'd be looking to get out the very next day or the same day. And this one's about 50-50 on the call to put ratio. The $28 put is by far the bigger volume of the bunch with the highest open interest. And we see that it has a little bit higher delta, about the same theta. So definitely an option to play if you decided you think that it's going to do worse going in, and maybe possibly swing this after earnings and seeing this thing do its normal dip that we see so often once earnings are reported. So definitely pay attention to this make a decision. But anything you do, you got to be smart, you got to be educated, and you got to do your own research, guys. All right, and you know that TWR, man, we got 4 principles for success. We're going to talk about managing today because I've been getting a lot of questions about portfolios being wrecked and things of that nature based off of this bloodbath we've been having. So we're going to rock into managing, and we're going to talk about that a little bit and see if we can't get us back on the right track and be ready to execute properly when the market opens at the bell. So when we're talking about managing, man, it really comes down to risk management, okay? What is your risk tolerance and your risk threshold, okay? If you're super uber risky, then, you probably have a high threshold and, you're not worried about a few dollars, a few cents breaking the bank, okay? But definitely if money is tight or you're getting nervous and you get emotionally tied into your trading styles, then you're probably a less risk adverse type of person and you want to be a little more conservative, okay? So big thing about it is we have to make sure that anything we get invested in the market, that we're not thinking that if the market were to tank completely, this would destroy me 100%. I'll lose my house, my wife would divorce me, things of that nature, okay? We got to make sure that this money is a gamble essentially and that we're able to lose it and still be okay and make ends meet and take care of what we got to take care of, okay? So when we talk about managing our portfolios, we're talking really about managing ourselves and managing our risk tolerance, all right? So that comes down to knowing who you are, knowing what you're trading with, and knowing your style. If you can't afford to throw $1,000 in the stock market, then don't throw $1,000 into it, okay? Scale it back to something that you're comfortable with, that if you were to lose it, you would still be okay. And if it may even be $100, but that is your risk tolerance. That is how you manage. Now, on another spectrum of managing, I want to talk about securing your portfolio as well, okay? Because securing and managing are two things, all right? So by managing your portfolio, man, we have to understand that the market is volatile right now, okay? So these 100, 200, 300% gainers, man, they may not happen. They could happen, but they may not happen, and they're not happening as often as when we're in a severe bullish market, okay? So we have to be content with 5, 10, 15% wins, okay? Consistency over time pays off in the long run, okay? I'll say that again. Consistency over time pays off in the long run. You take a 5% win here, a 10% win there, a 20% win there, and man, you're at 30%, 35% win rate, okay? You might have made 3 trades, but you're still up 35% rather than up 35%, down 20%, up 40%, down 50%, and now you're on the losing spectrum, okay? So managing our portfolio, taking money when money's presented to us, securing our portfolio, making sure that we're always making profit and cutting our losses off quick, and also never getting into the market with money that we can't afford to lose, all right? All right, guys, and that's the video, man. Thank you guys for bearing with me. Look, man, I told you guys I'm out here doing God's work for God and country, out here training the future of the United States military, and that's what I'm doing out here in the great desert of Western Colorado. But we're still making money, and we're still paying attention to the market, and we're still trying to educate and spread that genuine learning environment for like-minded investors, all right? Now, remember, Traders War Room, we look at the stock market like it's a war zone. Stocks and sectors, those are our battles. We do it together, man. If everything sounded good in this video and you like what you saw, like, share, and subscribe this. Join the Discord, come on a social media platform. And as always, if you're ready, follow me and let's go to war.